Hey everyone, John Henry here, slingshotfutures.com. Today we're going to be talking about the best time frame. What is the best time frame? What time frames do you use? I use a lot of different ones. Some of the time frames may be tick-based charts, other ones may be minute-based charts, hour-based charts. All of them have their different perks. So when it comes to, what time frames do I use personally, generally speaking, I don't really have one that I always default to. It really kind of depends on what you're looking to do. And each one, again, has its own benefits and perks and all of that. Really what it comes down to is what fits your personality. So for me, I generally am an intraday trader. I'm not holding trades for days and days and days. I'm usually in and out the same day multiple times. I'm not the type of trader to hang on. So I'm generally focusing on faster time frames. Some of my favorite time frames, 5-minute charts, 1-minute charts, and then tick charts. Now, when we get into this, there are perks, and again, good and bad to all of them. So first off, we have minute time frames, right? Well, with minute time frames, the perk that we have is that they're the same on all charts. Same on all charts, or give or take a tick or two, but there's generally no variance. A candle opens at this time, it closes at that time, whatever the distance it moved, there's your candle, piece of cake, done. Your candles will look like my candles will look like Jeff's candles, whatever. They're all going to look very, very close, if not exact. And that's a huge perk when you're trying to correlate data with one another, or if you have a group of people that you're hanging out with or trading with or whatever the case may be. It's important to have all of your charts look the same. If they don't, then you might run into some problems. So same on all charts and consistency, right? Now, along with that, it's very easy to calculate time-based structure. So as an example, what I mean by time-based structure are, if you refer back to the time zone type trading, the video that we did on different times to trade throughout the day, a lot of times they're blocked off in sections, and that's because people have to eat lunch and other things, right? So when the stock market opens, it opens at 9:30. Generally, people start going to lunch at, around 11 to 12 o'clock, and then from there, it tends to go a little bit quiet until around 1 o'clock to 2 o'clock, and then from there, it starts picking up. It's really hard to categorize those areas if you're using something that doesn't utilize time, like a tick chart or a range chart or any of these other types of charts. It's kind of difficult, right? I mean, you can generally block them off, but a lot of times, those blocking off happen right at the end of a candle. You'll see it jump up to finish off that candle or jump down, etc. So trying to bracket time frames makes it a lot easier with time-based charts. So they're just generally easier to use. Now, one thing that I kind of touched on there for a second is a form of manipulation that happens thousands of times a day, but that would be off of time-based charts waiting for a specific candle to close. So let's say, as an example, you're watching a 5-minute chart, and you're waiting for a strong bull bar, right? I want a strong bull bar, and then I can buy into it. Well, right at, it never fails, right? Like 2-3 seconds before the candle closes, all of a sudden, boom, there it goes, right? It was looking beautifully bullish, and then out of nowhere, in the last couple seconds, it hammers down and ends up closing as like a doji or something. Well, if you're looking at a tick chart, you don't see that information. So there's a lot of information hidden within the candle that you don't get on other time frames. So hidden information. And those are some of the big perks on minute-based time frames. Now, some other time frames, right? We can break this down even further. Actually, I'm going to do it like this. We can break these down even further and say, okay, well, we know that minute time frames tend to be a little bit more consistent. It's easier to use generally, and there can be some hidden information on there. Now we can break it down to faster, slower, etc. Right? So you have a 1-minute chart, right? Really fast. It's a fast time frame. And when you have a fast time frame like that, what's happening on each individual candle is less important. Now, candles are still important, the way that they form. I mean, a doji versus a strong bull bar, there's obviously going to be a difference, but it's a lot less important. And the reason behind that is fairly simple. You have a ton of them, right? When you're looking at a daily chart, if you're looking at 5-minute candles, there are a lot less of them in the day. With a 1-minute chart, there's a heck of a lot more of them, right? 5 times as many. So when you have that situation, faster time frames, these are generally more structure-based charts, right? You're looking at patterns, head and shoulder pattern, a cup and handle, a wedge breakout. That's what you're going to be focusing more on faster time frames. Now, as we slow things down, 3 minute, 5 minute, etc., these are still very fast time frames if you're used to trading on a daily chart. For me, I would consider these medium time frames, right? Now, with a medium time frame, we can focus in a little bit more on the candles themselves. Obviously, price structure makes a big difference. Price structure is obviously a good thing, but we also want to kind of know what the candles are doing because there are less of them. What happens on one 5-minute chart is a lot more important, 5 times more important, than what would happen on a single 1-minute chart, right? So the candles become much more important. So now that we know that the candles are a lot more important, we're still focusing on structure. That's still part of it, but we can zoom in a little bit closer on the candles and say, okay, a really strong bull bar on a 5-minute chart is going to have a lot more weight than a really strong bull bar on a 1-minute chart. And that same goes the farther and farther out you go. If you look at a 30-minute chart, well, you've got a heck of a lot less of those, right? So with what happens on a 30-minute candle is even more important than what happens on a 5-minute chart, especially more than a 1-minute chart. So the farther out you go, the more you're focusing in on the candles themselves, while still focusing in on structure, of course, but the candles themselves, the way they look, the bodies, the wicks, etc., it becomes a lot more important. Now, knowing this information, we can use this to basically kind of break everything down, right? And we can say, okay, well, if you like fast time frames, you don't have to use a 1-minute chart. Other types of charts would be tick charts, volume charts, range charts, Renko charts, all of these. You can adjust these and modify these to fit your needs based on the way you like trading. Do you like trading more structure? Do you like trading structure in combination with candlesticks? Maybe you're just a candlestick trader. You know, that's where you can really start breaking them down and saying, okay, well, tick charts, volume charts, range, Renko, these can all be modified to match what you're looking to do. Now, the big caveat here, right, now that we know what minute time frames look like, if we look at tick in volume and some of the other ones, tick in volume charts, tick and volume charts, again, have benefits and downfalls. Some of the benefits of tick charts are that you can modify them just like a minute chart, but it's looking at the actual incoming trade volume or trade number, right? So to differentiate, if you don't know what the difference is, a tick chart is looking at the amount of trades. So if I place a trade for 100 contracts, it's still one tick. It's one trade, okay? Unless it gets broken down into like 4, then it's 4 trades. But you get the idea. One trade, regardless of size, is one trade. That is one tick in this case. A volume chart would flip that. It doesn't matter how many times you traded it. What it cares about is volume. So that one trade of 100 contracts, that would be 100 volume on that candle, right? So generally speaking, tick charts are usually half to a third of the size of a volume chart if you're looking for an equivalent. So if you were looking at a 1,000 tick chart, if you wanted a volume chart, it would probably be closer to like a 3,000 volume chart because, you know, generally a lot of traders are trading more than just singles, not always, but you usually have a higher volume than you do with ticks. Now, the nice thing about that is it negates a lot of the quote-unquote noise, and I hate that word because nothing in the market is noise, but it kind of negates it. It gets around that by not utilizing time. There is no time variable. What they are looking for instead is that it's looking at when X amount of ticks or X amount of volume comes in. That's the beginning, the movement, and the end of the candle, right? That's how it's broken down. So if you're looking at a 1,000 tick chart, what it will do is when the previous candle reaches 1,000 ticks, it starts the new candle. 1 tick, 2 ticks, 10, 4, 500, 600, 1,000, done, right? Candle's done, starts the next one. Same goes with volume, it just uses volume instead. So you end up getting away from some of this noise and other things you end up dealing with on minute charts that you might have, that you might not have to deal with on tick and volume charts. Generally speaking, tick and volume charts favor faster time frames. They allow you to zoom in a little bit closer, see the overall movement of what's going on a little bit better, irregardless of the amount of time that's passed. Okay, so usually when I'm looking at tick charts, I'm thinking faster time frames. For crude oil, an 800 tick chart, 1,000 tick chart. If I want to go faster, you can modify them. Just like we were talking about. You want a faster tick chart to zoom even closer in? Go to a 144 tick chart if you like fib numbers. They can be modified and customized to fit your needs. Now, if we look at some of the other options, right? Some of the other options would be a yellow, there we go, would be a range and Renko chart. These don't have any impact on the amount of trades that are taking place. They don't have any impact on the amount of time that's gone by. These are purely derived from price movement. So it's a little bit more of a structural mindset. A range chart and a Renko chart are going to favor trading with structure a lot more because they don't care about how much time or how many trades took place. What they care about is how far a candle went. So if I'm using a 5 range chart, right, what would need to happen is from point A, and we'll just say it's $74 even, when it goes to $74.05, that's your 5 range candle, but it's got to move one more to finish off that candle, to go to the next one. It can go 5 and it'll just go back and forth all day on that same candle. But as soon as it goes to 6, it's now completed its 5 range and started the next one. Okay? So that's why when you look at range charts, it looks like there's gaps in there. There's not. It's just going to the next 6th tick or 10th or whatever range you have it set on. Now, this is where range and Renko kind of deviate from one another, because range will just keep that cycle going up, down, doesn't matter. As long as it goes 5 plus 1 or 10 plus 1, that plus 1 starts the next candle. Renko is a little bit of a different mindset, and there's a lot of variations on Renko charts too. But generally speaking, it's also based on price movement, but it tries to get away from those really heavy pullbacks by negating them by twice the size of the period. Now, what that means, right? Let's zoom in a little bit closer. A Renko chart of a period of 5. That means that when it goes 5 ticks, it'll start the next candle. Go 5 more, 5 more, 5 more. You get the idea. But for it to form a counter trend candle, let's say you've got a string of green bars, well, to get a red bar, it has to go twice the value. So if you have a 5 Renko chart, it would have to go 10 to the downside. And the goal of that is to try to get not whipped out of trades, to stick with the trend. But again, because it's based on price movement, it's a lot more structural based rather than candles. It doesn't matter what the candle does because the candle's always going to pretty much look the same. It's just going to be a brick, right? That's why they're called brick charts. Now, these types of charts, if you're more of a structural type of trader, you might find them to be very beneficial. You might love these types of charts to trade from. The one thing that I don't like so much about Renko that I like more about range, I like what Renko does and what it tries to accomplish by, trying to get away from getting whipped out of trades. I get that, but it doesn't show you the wick. So if I were to open up a Renko chart, it by default won't show you the wick on that candle. It'll only show you the bricks, the bodies of the candle. And you can miss a lot of information with that. Now, there are options that are out there to buy and download and all of that have Renkos with wicks. If you're going to use Renko charts, I would recommend maybe trying to find something like that so you get all of the information instead of just hiding part of it. But range charts are a great alternative. And outside of that, there's a ton of other ones. There's point and figure and all this other stuff, but those are the most common ones that you're going to see me use. I like 5-minute charts, 1-minute charts, tick charts, and every once in a while a good range chart. I almost never use Renko because I don't like that lack of a wick. But, what's the best time frame? That's a good question. It depends on what you like trading. If you like trading faster, more zoomed in movement, you might love tick and volume charts. Maybe you like a little bit more of a structural variation of price movement, you might like a 1-minute chart instead. If you like structure more than anything else, and you don't really care about the candles, you might love volume and range charts. I'm sorry, not volume and range, range and Renko charts. Those might be your preference. So, what the best candle is kind of depends on you. But that's a breakdown of what each one does, what they're good at, and sometimes what they're not so good at. It's something to consider, maybe something to look at. Maybe you've never even considered looking at a different time frame. Maybe your charting platform doesn't have them available. It should, but it might be something to take a peek at, something to add to your tool belt. I hope you found this video enjoyable, useful, entertaining, and informational. You might be able to find something to add to your trading belt there. As always, underneath the video, make sure to throw the video a thumbs up. Give us a like if you like the video. Along with that, subscribe and click the notification bell icon to the right of that so you're notified every time one of these videos comes out. You don't want to miss anything important. And aside from that, as always, I hope you had a fantastic trading day, and we'll see you in the next video.